Assalamu alaikum everyone. My name is Bashar Qasem. I am the President CEO of Azad Asset Management. We are a wealth management and a financial planning company established back in 1997. We are the sponsor of 11 portfolios, 2 of them are mutual funds. One of them is the Wise Capital Fund, the first halal Shariah compliant fixed income that was established back in 2010. We manage 8 managers, so we are a manager of managers, and we provide personal service, including the financial planning, purification, and zakah calculation. Today, inshallah, I will focus on something in the mind of every one of you about what's going on in the market, the volatility that we are witnessing in the past few months, and how this is really affecting the Muslim investor. As we know, successful long-term investor understand the stock market rise and fall. And I know this is really bringing a lot of anxiety to investors, and especially to the Islamic investors, since they have less options than what the other investors have. But I think as our industry is growing, there are really few things that you can do and you can benefit. As you know, the industry is going through a major reform, especially in the light of the financial technology, and it's making investing a lot of things possible that wasn't really possible before. Although at the same time, the high frequency trading and the speculation that is increasingly, especially the model investing, the passive investing, as known, in the past few weeks, 80% of the trading was actually driven by computers. So how the Muslim investor will be able to cope with this? So let me introduce you to the latest trend in the industry, something called goal-based investing. And if your financial plan is aligned with your risk appetite and your financial goal, then the market ups and downs should be already factored in. There is a theory, this goal-based investing theme is based on a theory by a Nobel Prize winner, Robert Merton, and he's saying the only feedback the investor needs from her plan provider is her probability of achieving her income goals. So now shifting the theme from focusing into the gyration of the market and the instability into the goal itself. But how can the Muslim investor actually implement this? That is really the challenge, because you need a special application, a special calculation tools to help you do number crunching and creating simulations of million possibilities. The second challenge is, do we have a long history of Islamic investing that will be able to feed this tool so it can generate the probable goal that you can achieve? The good thing that in February of 2018, the Dow Jones Islamic Market Index, the best indexing company in the world, introduced 27 indices. 15 of them, they are allocation indices. They are risk-adjusted indices. And this is really for the first time. It is a project that we worked with the Dow Jones for almost 2 years until they introduced these indices. And they have the market history that go all the way to 20 years. But the exciting things also, that these indices are risk-based indices, that they have, other than the stocks, they have the sukuk, which is really the Islamic alternative to bonds. And as you know, the relationship between sukuk and the stocks, they have weak correlation. So you will be able to manage your portfolio and set your risk tolerance. So this is all based on risk. First of all, you need to identify what is the risk tolerance that you can handle. There is a risk tolerance and there is risk capacity. Risk tolerance is the amount that you can emotionally handle without being panicking for the market fluctuation. And the capacity is the risk, the emotional risk, or the financial risk that you can handle without feeling that you have to change your lifestyle. So start focusing into your risk first. So what we did, we implemented this risk-based investing by utilizing a tool that will be able to assign to the investor a risk number. And what is the risk number will be on a scale from 1 to 100, where 1 is the most conservative and 100 is the most aggressive. It is the downside risk, how much you can or you can handle to lose in a time frame of 6 months. Let's say an example, at 12%. That means I can handle to see my portfolio drop by 12% within 6 months, and to go more than 12%, it probably have a very low probability, less than 2.5%. So imagine 97% that your portfolio in 6 months will do better than losing a 12% or 10% or 11%. So this is really the magic number that you really need to reach and understand that this is really my downside risk. Once you define your downside risk, then comes exactly what is the expected rate of return. So in this case, let's say 12%, expected rate of return is 7%. So in this case, you can build your goal and you factor in all the history of the market. And since we have almost the Dow Jones indices, they go back almost 20 years, since 1998. That includes the dot-com bubble, the 9/11 event, the financial collapse of 2007, and all the corrections that they have witnessed in the past. So by focusing on this, then once you do this number crunching, you come up with a goal. And in this goal, you will say, like, you know, if I have a portfolio of $100,000, I will be able to achieve probably, like, you know, $2,000 of income from the time I start retirement. And this should last, for example, 20 years, and you should end up with a specific portfolio value by the end of the time horizon. Let's say your life expectancy 85 or 90%. Then in this case, all what you focus is on the probability. So every time the market goes up or down, instead of focusing into the fluctuation of the market, you focus on what is the probability that I will achieve this goal. Because this is really what is the purpose of the investing. It's not just to invest with no goal, you invest with a specific goal in mind. So this is really the new theme that we are adapting in Azad, and we making it available for our clients, helping our clients cope with the market volatility. The other point that I want really to share with you, it's when you invest in halal, there are two services that are vital for the Sharia compliance. The first one is the purification, is the cleansing. That, you know, as you now apply the Islamic guidelines as set by IOFI, the purification process, it is a process where you have to cleanse some of the portfolios or the securities that you have in your portfolio. And this is really required by IOFI standard number 21, that make it the responsibility of the financial intermediary to provide investors with the cleansing calculations. Unfortunately, many clients or many investors, they overlook this point, which is really important to achieve a high degree of Sharia compliance. And this cleansing, it is really for the securities that really pass the Islamic guidelines, because as you know, they may earn revenue from prohibited activities that never intended when we invested in these companies. So this is really a process that I urge investors to really demand it from their financial intermediary. The second service that also important, that these securities, they are a money, they are a form of assets, and they are liable for zakah. So the zakah service is also important. And just to share with you, in your portfolio, you can apply the zakah guidelines as set by AOFI, standard number 35, where some of your securities, you may have it as you intended for a trade to benefit from the price appreciation. Other securities that you may have it to derive an income. So the first one is treated as urud tijara. The second is treated as urud mustaghallat. The first one, which is urud tijara, or the ones that you intend to benefit from the price appreciation, the zakah base is the market value of the security at the time of the hawl. And that's really very simple, very easy. The second one, which you intend to own or invest in to derive an income, the zakah base is actually the zakatable assets on the balance sheet of the security. So the company, you look what are zakah assets there, inventory, cash equivalent, etc. And then you assess the zakah based on these numbers. Thank you.